Good evening and welcome again in another video, Smart Money Concepts Part 3. More fundamentals, the combination of ranges, time frames, and bias. It's getting a little more complicated now, so uh, be focused. So, where do we start? First of all, we got to define a bias. And we're back to the concept of fractals. And here you can clearly see prices going up. So we have a bullish bias. Let's say this first line is the daily. The second line is the hourly. And the next, let's set this aside so you guys can see it. What I mean, these are the fractals that we first have to understand. And here we see how price is moving here, comes down quickly, goes up again, goes up even more, comes back down, sets a new low, goes to the high, comes down, sets a new break, comes down, forms a little bit, drops steadily down, goes even lower, goes up again. This is what we call the market is fractal. You see, this was the daily time frame, the hour, and the 5 minutes. Now, let me put the last one aside, the smallest, and I have to rearrange this a little bit because it gets a little messy if you draw it like this. Now, the range is the same. We are trading from here to the high. The high gets broken, so we get a new high. And you see, it happens on all time frames. It happens simultaneously. Although it doesn't always look like that, but you'll see in a live market, this will always return as in fractals. Now we have on the daily a bullish bias. Here we have a bullish bias, but here, let's say this happened. Here we got on the hour time frame, 1 hour time frame. You see we have a market structure shift here and price goes back up, comes down more to about the 50% of the high low. And here we get a scalping opportunity to go short. So we could have gone short here for a small scalp, and you see we can easily get a 1 to 3 out of the market here. Look, there is always opportunities in the market. Now the best trade here, this is counter trend trading. So I would be careful with that because the chances are that you get tapped out and that you get stopped out. And that's never funny, but it's part of trading, so learn to live with it. Here we see a break of structure and we know we are in a bullish trend. So here we could go look for an even better setup that came in part two. We've seen this. And look, here we can get a 1 to 6 risk reward ratio. You see, So trading in line with the higher time frame and the fractal time frame bias is always better than going against the trend. And here you would see the same setup would play out. This taps the line, and this one, let's say it went up immediately and tapped into the take profit. So this is fractals, the combination of ranges, and you see the ranges, yeah, in the fractals, they would move a little different because here you have the high is being broken, this becomes your new high, this stays your low, the high gets broken, so you get a new high. Then this low gets broken. So on the fractal, you know that we are now going into a bearish market. This stays there. And probably this happens again, where you see the market structure shift already happening here, and we go further up. So let's put this back on top of the other one here, and you'll see exactly what I mean. You see? And here again, we have the smart money pattern, the setup that we like to look for. Here, this. Always coming back. So, I hope this video was a little educational, that you guys picked something up out of it. I know this is basic content with basic explanations. I only have 10 minutes to make a video. It has to be short, quick, and prompt. So don't blame me, blame TikTok. And thank you for watching, guys. I really enjoy making content and showing people some more about professional trading and how you can learn to become profitable, because that's really important. And yes, see you in the next video, guys. Bye.